So you already know we got to catch the sell side of the story. When you want to be a seller. If you want to be a seller, you have to go through what? You have to interact with who?
Buyers.
Buyers.
The buyer. That just makes sense. That makes as much sense as if I want the water to turn on, I have to open up the faucet. That makes as much sense as if I want light in my house, I will flip this switch. Like when you sell, you have to sell to a buyer. Doesn't that just make sense? Because
Correct.
one is in the posture of giving, one is in the posture of receiving. See, if they're both in the posture of giving, there would be a wall there and nothing would actually engage. One has to catch, one has to throw. All right, so that's that. Now, a seller's mentality is that they want the price to move in what direction?
Down.
Well, I guess it depends, right? I want it to move down to take profit, but I want it to move up to get in. That's my mentality as a seller. I want markets to drive lower so that I can get out of them. But to get into them, I actually want them to come up. That's like my mentality. I want to program my mind into understanding. I want to sell into the up moves. When the market is moving up, what is it reaching up into? What is it reaching up for? That's what I want to sell into. But I want them to drive lower so that that's where the opportunity to make money exists. So if I want them overall to drive lower, that means overall I don't want them to drive in what direction?
Up.
Because if it goes up overall, the ability to make money is not there. And the goal is to make money. So as a seller, I need the markets overall to drive lower. They have to have a reason to go lower. And then that's where the opportunity to make money is. If they go higher, that's where the opportunity to lose money is. That's where your stop losses are usually located relative to your entry and target. So whenever people like see double tops and stuff, they have this idea of resistance, or like whenever a high is being formed, they just whenever they're seeing like just this downside or the break of these lows and stuff, they just think it's going to go down, or that there's resistance there. That creates a belief, or that creates behavior as well. It creates both the belief that this is a sell pattern and a behavior to match that belief. They try to sell, which will also load up what above the highs.
Buy stops.
Right. Those buy stops are the sellers, those who are selling, they have stop losses. Those stop losses, they're not just SLs. When you put a stop loss, you're actually placing a pending order in the market. You're literally choosing to place an inactive pending order into the marketplace. All right. And then what the market does is it uses that as a heat-seeking missile, or it aims at it like a heat-seeking missile, and it just aims for that. So if you understand that, then this can help you understand how to get into sells the right way. So you need to let the initial highs come in. You can't react to a reaction, but you have to let it play out, allow it to form. Why? Because now it's giving you good intel. It's actually giving you an objective to aim at. See, without that high coming in first before your entry, you don't have an extreme. And without an extreme, you don't have stops. And without stops, you don't have an entry. And without an entry, well, there's no potential to make money. So, man, that was a good one. Go ahead and rewind that one. All right. So do you guys understand what's going on here with the stop losses and the fact that those are actually buy orders?
Yes.
that you can sell to on this side of the market at a later point in time. See how time passes? Those orders remain inactive for a certain duration of time. And then at a certain window of time, in that certain window of price, the market gets there and it starts to deal with it. It starts to deal to the market. You can sell to the buy stops now when the market is there at that time, and you're anticipating the price to run lower in order to make some money. All right, so that's enough with the concept. Let's go look at it. Look at it just right here, right off rip. What's above these highs here?
Buy stops.
Okay, so let's deal with what's down here. Oops. Second. There we go. You see this area forms like this, and then you see a price run lower. You already know what it's dealing with there. We're dealing with this upside here. So this generates a belief, this type of behavior, this type of movement, this type of level, right? It creates like selling. People want to sell. So they load up their stop losses above here. Those stop losses are buy orders. Remember, if you want to be a seller, you need to deal with the buyer. So I'm showing you where buyers exist at a high price, because not only do you want to sell to a buyer, but specifically you want to sell to those who are willing to buy at a high price. So what price is higher than high?
Extremely high.
Extremely high, exactly, which is outside of the high right here. That's where the market goes. It goes to the extreme. It takes out the stops, it deals to them, and then it runs out. Guess what it runs out? You already know, but we're dealing with the top side right now. So how do I install this into my mind? How do I get comfortable with seeing this? Well, now I understand the lay of the land, the environment. You see, it's all about the land. I understand the environment now. I'm going to reverse engineer it. At this point, this is where I want to absolutely exit the market. This is the down close candle before it reacts. See, I already know the answer. I'm a hindsight warrior, and that's okay because I'm training my mind the right way without having to gamble or guess. So I'm below a low with the down close candle before reaction. That's where I want to exit. This move, it's the poke below before it prints below. Poke below before the print below. See, so now I'm feeding the data little by little. And it helps me see things. I see the market is underneath some data here. And that's why you see a small reaction, smaller candle. It's interesting, it's big candles, and then you see a tiny candle down there. Under here, you see the candle close below it, and you see the wick try to reach for it on this side of it. It's interesting. And then here it's just the candles become really big once it breaks below that low specifically. You can see they're tight beforehand, but once it gets below that low, it runs. So see, I'm reverse engineering this whole move from end all the way back to the beginning of it. And I'm noticing all these little details and studying the environment. All right, this is that first break of a low, like a really major break of a low, after taking out a high that shows big price action that's ready to just run out these lows right here. So this is when the energy is ready to come in. That's 3:50 in the morning when it started, and it closed at 3:55 in the morning. See, so now I'm throwing a little time in there. This is the last up candle before the move started to go down. This is the absolute best time to sell. 3:25 in the mornings when that candle opened. It closes at 3:30 in the morning. And it closed as an up candle in an extreme environment where buy stops exist. You could sell to that. And what are you anticipating? A reaction down. And what really starts to confirm that entry, not only does the environment already confirm it though, But when it really breaks down, then it really starts to agree. You see, it really starts to confirm and validate that area. See, so like by the time people see this, their entries are now going to be way down here, and it's going to be an issue with drawdown and fluctuation. We already got the best prices at the best position. See that this candle before this reaction underneath this low is where I should have gotten out. Right here. I just clicked too fast. So I'm gonna get out now. So now look how early I can see all of this. As soon as this low gets made. Say you don't want to use that wick because on the line chart you can't see it. That's okay, fine. Use this area over here. I don't care either way. So already with that range, you can see that there's a lot of data here. It's compressed up in a box. So that means there's a lot of stops right above that in the form of buy stops. See on this side. And over here on this side, see they're inactive now, but later on when the market moves into them, they become active and you can sell over there. So let the market build up. There's going to be stops here. Why? Because the idea of there being a high. Simple as that. What exists above a high?
Buy stops.
Buy stops.
Well, I need a place to put it. So like what first exists?
The extreme environment.
Right. And then the extreme above a high, what exists in it?
Buy stops.
Buy stops. And it's important that I show you that because I'm showing you how the market behaves when it wants something. And that's the something it wants. It wants to run into the extreme because of what's in it. But look how it runs into that environment. I'm trying to show you something. That's why you want to point out where the highs and lows are, because that's where markets run to. And you just got to see what's the context at that point in time that you're analyzing to see what it's trying to run to next. So this is an up close candle in a environment where there's buy stops. I could sell here. Reaction is what I'm anticipating. Stops is what I'm looking for. My eyes are automatically below those lows in the extreme areas. So I'm trying to go from one extreme to the next. Market is giving me another opportunity. Reaction. This opportunity came in at a 325. This one came in at 255. Price run. Exit.
Done deal.
So that's how you do that's the selling mentality. That's how you want to work on selling above highs, and you want to target the extremes below lows when you're selling. Any questions?
What would have stopped you on getting into a position inside of the range?
Where, in here?
Yeah.
Let's say you did get in here. Would
Well,
you?
let's say you waited for that and got in at the up candle when it went into the extreme.
Yeah, what about it? What if you did get in? Would that be a bad entry?
Well, in the case of you being a seller and thinking like a seller, not necessarily.
Exactly. Let's see how much space that is.
Yeah, that was my next question.
11 pips. It's not bad.
Yeah, you can make that work.
Yeah,
How
and
would
this
You
is
gotta
this is
recognize we're on a smaller time chart.
well this well there's that. We're on a 5 minute. You can see the lay of the land better, maybe somewhere else. But if we're dealing with it as it is, let's just say you do get in there. You have an 11 pip exposure. That's not that bad. Um, as a seller, let's say you saw this as a range, you're an expensive part, but there's not really any stops in the area as if you were here. That's the only thing. That's what'll filter me out. That like I try to find a reason why I would get in, but now I'm seeing that well, the main thing is that I need buy stops and I don't really see any
Well, that's what I'm saying. So now that it created the buy stops and you're
here.
going above, yeah, now you're going above it. That's
Mhm.
why I said I would pretty much, yeah, get in there. But how would
Oh,
my
here?
next question? Yeah.
And that's fine. That's good. That's even less exposure than the first one I thought you were talking about. Let's see, that's gonna be 7 pips. It's not bad.
You got that, Mikey.
Right.
Yeah,
And now
you could
my
hold that.
of course. Yeah, my other question would have been, how would a seller know when he's wrong?
Well, when it reaches a certain threshold or a certain time of day and it hasn't performed a certain thing.
Okay.
Because the behavior of a up candle, it behaves a certain way and it's under the restriction of time. So it has to produce a certain outcome under a certain amount of time. That's why like I say reference time and reference the open price. Because sometimes based on where the market's at a certain time in the day and in relation to that open price, it can actually pretty much tell you and strongly suggest to you what kind of day is going to close, whether it's going to be a down day or an up day. So yeah, it's just a matter of juggling and multi-time frame analysis. Like if we'd have gotten a long-term perspective, we could you get when you handle more data, you get more information, so dealing with it as it is, that was just me dealing with it as it is. But who knows, like if I was analyzing the 1 hour or the day, I probably could find a way to just target those right there, or maybe I can't. I don't know. But let's see. Look, where's the 5 o'clock open?
Right there.
Those three are great entries. I don't know. Like I would get in all of them. But these especially because of how flat this all is. Whenever you see the market really flat, that's like a strong invitation. But anyways, just to show you another example before it runs out of time, I want to show you this high right here. You guys see it?
Yes.
So what's located above the high?
An extreme environment.
Buy stops.
And what's inside the extreme environment?
Buy stops.
Buy stops.
Very
Well, in
good.
this case.
In the extreme environment above highs are buy stops. What can you do with buy stops?
Sell to
Sell to them.
All right, and what is the best condition of like where the candlestick ought to appear, how the candlestick ought to appear, and where the candlestick ought to appear in order to enter these cells right here? Which are the best candles to trade?
The up candles.
The up candles that close inside. That closes above the.
Why?
that closes inside of the
That
extreme.
brings the reaction.
Right, that's gonna bring on the action, basically. Let's just do I don't know. I thought she was with you.
What took this shot for?
Didn't I hand her to you? Then why am I over here? My daughter was doing an expedition in the closet. That's cool.
Oh man.
Well, I really thought you had her. That's why it like was she playing with the cards?
The vacuum.
Oh yeah, she liked that vacuum. That's cool. Holy crap. All right, so first down close candle below the low. let's just say that. Let's just be nice. Let it have that. I'm not concerned about this. Maybe you can be if you're looking at a bigger picture, but I'm just dealing with this picture as it is right there. I'm looking at this. This is all I really care about. This, if you understand this, you will just become consistent today. Like if you just understand this, you will automatically become consistent. At first, you'll be annoyed that you're leaving a lot on the table, but you'll get better at that. But really, you're really going to be happy that you could just access it whenever you want and just come out of it on top.
Mm-hmm.
Same thing happened there. Stops under here. Just want to point that out. But yeah, above these highs, up candle, reaction. Run out the lows. Reaction, lows, created some highs, ran out those lows, used the orders below those lows to run these highs out. Those 3 up candles is where you want to be selling into in that environment, anticipating the run down lower to what's available, which is this. This is the target. Okay, so see, even when it's down here, I see the market's below the low. So I don't want to sell it in this environment because there's buy stops here or sell stops here. So the market will react. I would rather sell here because there's buy stops here. It just makes more sense. So I'll wait. The market runs in. Up close candle where there's stops. 8:30, sell. Oh, sorry. I hit play by accident. Reaction. Still reacting. It came back, closed up in the environment. I will react to that. Closed up in the environment again. You can respond to that. So this is how selling looks like. This is what selling feels like. I'm exposing you to the experience of selling above a high to up candles, anticipating and understanding that the run is actually going to go lower, and then showing you what it looks like to take off when it's actually running out the low. So I'm not only telling you what the market does, in concept or theory, I'm showing it to you so you can see it, and I'm demonstrating it. And then when you do it, you're practicing it. So we're really creating good habits, good patterns of behavior and thought processes. Candle close below the low, we're out. If you understand this right here, you're going to be a baller. Just saying.
Certified RDA baller.
Isn't that what I drew earlier?
Yes, sir.
What exists above here?
Extreme area with buy stops inside.
What are you waiting for?
An up candle to close inside of that extreme area.
What are you going to do?
Sell to it.
And what are you anticipating?
For a candle to close below the low so we could exit.
You see,
Simple as that.
you guys have process-oriented thinking. You have a start-to-end mentality, and you have places to shoot at. That's very powerful stuff. That's very powerful stuff. And then you just have to do some RDA, some data collection to understand your time windows, and do some qualitative data analysis, which involves chart time and watching charts print, and drawing charts to really get down where you want to strike at.
Right.
Or at what point exactly does the market show that it's about to, run because it has little characteristics and you can study that. Any comments or questions on the sell side of the market? What you're trying to do as a seller?
I don't know if this is actually coinciding with this, but it might. Are you going to tell us the HPEs, or do you want us to like transpose the buy side to the sell side? Because either way it works.
Let's do it together.
Mhm.
Do you guys have the buy stuff on somewhere visible?
Yes, I do.
Okay, so like what was the first one? Buy, sell stops, right?
Mm-hmm.
So what's this one?
Sell buy stops.
Let me label it too. So then what would be the HPEs for the sell side? Well, we sell buy stops. What's next?
Sell buy stops.
Above
At-
highs.
Yeah, above highs, at or above the open price.
Or near. Above, at, or near open price.
Okay.
Sell buy stops at a specific time window.
Specific time of day and day of week.
Buy above 50% line.
We're on the sell side, bro.
Sorry, sell above the 50% range of previous candle.
Sell buy stops.
I'm gonna let you collect your thoughts first.
Sell buy stops at or above 50% of recently created high to low price range.
Yes.
Sell buy stops at
Thank you.
Above
Najee.
50% of recently created high to low. Like that?
Mhm. Yep, high to low price range.
Okay. Anything else?
Well, we're waiting for the other ones, but for right now, yeah.
Well, sell to up close candles
Mm-hmm.
above highs. Well, let me just put sell to up close candles, because then wherever all of these things are, your focus is selling to the up close candles in those environments at those specific time windows. And then I still got another one I might introduce next week. I got like two more. So that's high probability elements to sell. Sell, you want it whenever you're selling, sell to a buyer. Find where that buy stop is. Where's it located? Predominantly above highs. So you want to be looking for buy stops. You know, if you want to take a position on the day, you want to be at, above, or near the day's open, on top of a high, on top of some buy stops. That's where you want to have sells positioned. Because when the day unfolds and the market goes under that open price, you're going to have a down close daily candle body, but you're going to be positioned above the open, which means you're in the wick of the daily candle. So that's why, I put this. Sell buy stops at specific time of day or day of week, because if you time it right, you're going to just see action. You're going to see powerful movements away from these areas. Sell buy stops at or above 50% of recently created high to low price range, because you're trying to get a good pricing for your orders to be positioned at. You want to just fundamentally be at a good price. Sell to up close candles. Up close candles close near the highs. That just makes sense. Up close candles generate the belief of a buyer, so it creates buyers, which means that you would be selling to people who are trying to chase the market, but they're buying it, but you're selling into them, and the market actually desires to go lower. So either way, you're selling in an area where there's buy stops that's above a high, and when you sell to an up candle, you're probably selling to a fresh buying at the same time. So it's just really good. It sets up really good trading, and even if you're wrong, you'll probably see a correct reaction for a little bit just by going with these HPEs. You'll always see some kind of movement if you interact with these HPEs the right way. Any questions? That covers, I think that
No,
covers
sir.
covers that. Alrighty. And then let's see, it's 10. Maybe I could do one more and we'll just do a install program and we'll just do a bunch of these and just collect experience on both both HPEs. We'll be doing both sell side and the buy side and just call it a day. We'll call it a week. Is that good for you guys?
Yes, sir.
All right, slide
Yes,
yourself
sir.
in the face,
Man.
get some water, use the bathroom. Let's finish strong. We got one more to go. Okay,
Full stride.
peace out.